This essentially means the financial responsibilities will shift from lenders to borrowers.
Yeah, it does mean that. I mean, it will be a shot in the arm for housing. We've certainly seen it before.
Do you think this could potentially lead to irresponsible lending?
Oh, look, it may do. I think the banks will be careful. We know the banks have been through a Royal Commission. It's certainly very, very different in terms of the way they're handling lenders, borrowers. So it will be a very different situation, I think, this time around.
What is your take on this announcement?
Look, I think for housing, it will be positive. We do know that the housing market is doing pretty well in terms of existing housing. The big issue is new development. Also, investors are really struggling at the moment. So ideally, it will give investors a little bit more confidence to get back into the market. The other thing too, though, we do have very low interest rates. Access to finance is very easy at the moment. So, on one hand, borrowing is getting easier. We're in a recession, we're in a pandemic, but at the same time, the housing market does seem to be doing okay at the moment.
Well, on interest rates, the Reserve Bank of New Zealand has announced they are considering negative interest rates. Do you think we'll see this here?
Look, probably not. I mean, the Reserve Bank have said that they won't go down that path. The New Zealand Reserve Bank is looking at it. We know that they are. We've also heard that in the UK they have been telling the banks to get ready for the potential for negative rates. So the Reserve Bank has said that they won't be doing it at this stage, but we know that if there's any time to be going into negative interest rate territory, it is at the moment. I think for home buyers, though, it is unlikely that we will be seeing negative mortgage rates. There has been one case in Europe where they did have negative mortgage rates for borrowers, but at this stage, I think that, not this stage, I think it would be very unlikely that we would see negative mortgage rates.
Now, the City of Melbourne has an election next weekend. Can the elected Lord Mayor turn around an impending property market disaster?
Yeah, look, it's really, really bad news in the City of Melbourne at the moment. So although the housing market is doing okay nationally, what we are finding is an incredible rise in the level of vacant apartments in inner Melbourne. So the suburbs that encompass the City of Melbourne, we have seen almost a tripling in the amount of apartments available. There's almost 12,000 vacant apartments in the City of Melbourne at the moment. We've also got a big problem with vacant shops. We've seen 230 shops within the City of Melbourne, an increase of 230 vacant shops over that time period. And also the office vacancy rate has tripled. So really, really big problems. If we have a look at what's ground zero, I guess, for property market trouble at the moment, it is very much inner Melbourne.
Such an interesting time. Nerida Conisbee, Chief Economist at REA Group, thank you for your time today.
Thanks for having me.